We're back with Brad Simpson, Chief Wealth Strategist at TD. Brad, we were just talking about all the big macro things to be concerned about, inflation, slowing economy. What does an investor do in terms of putting that to work in their portfolio?
Yeah, well, I think the starting point is that one of the things that seemingly have been then lost around is I think a good starting point is remembering this is about investment, and it seems to me that every year that seems to go by, that things speed up, and that gets lost along the way. So when I say means about investment, is ultimately you're allocating capital to something that you think is going to have more value down the road, but as part of that passageway is that things are going to happen along the way. So I think the second part then is that we're going to think about what you're investing for. So thinking about what those time horizons are clearly. And then the next part is how am I going to allocate capital? So right now we are overweight fixed income. And, like if you think about the first half of the show, what are we talking about? Rising interest rates to slow things down. If then the opposite is that once you slow things down, you bring interest rates back down again to get things going again. Typically, that is really good for fixed income markets. So today, 10-year Treasury at 3.5%, and you kind of look across, the capital stack from there, that we think that fixed income makes an awful lot of sense. We actually published today a kind of a special edition income piece that we call Forest and the Trees. And it's really where we're talking about this incredible movement into cash and money markets and really what the price of it's been, and look at the performance of looking at having actively managed investment portfolios versus just being in cash. And while we think it's been an emotional decision, it hasn't really been a decision that's really paying off in investment terms. So if you want safety and income, there's a lot can be found in fixed income, and we think that makes an awful lot of sense. On the equity side, that we think we have full valuations in equity markets. In U.S., particularly so, 18.5, 19 times earnings. I don't think anybody would argue that's inexpensive. Canada is kind of in a similar boat. But I think what we have to do is we start looking as an investor. We have to be, one, underweight. This is a good time to be cautious. We haven't really touched on the debt crisis right now, but we have very low volatility. We should see more volatility moving into the debt crisis. And we think even when you get to the other side of it, depending on what that outcome is, we're going to see more volatility as we go through time. So on the equity side, either A, making sure we're buying good companies with good value, but also you don't need to be long only when you're buying equities.
That's true. Right? That's true. There's different ways to play a market.
Right. So you can hedge, you can run long, short, and market neutral strategies, and this is an environment really made for that. The long, short, and market neutral strategies have a cash position, which pay a cash return in it, and then you have your equity return that you make on top of that. And so we think that in a situation makes a lot of sense too. But for real clarity in this is that this is a time where you're going to be allocating during periods of volatility. It's a difficult thing to do.
Patience and perseverance. Right? You made your choice and then
that's it.
See it through.
And so I think that like for us, that's really where when we look at it is in our quarterly strategy we published this month we called it the kite. And that was about, your investment portfolio was a little bit about moving in these shifting winds that are out there. But if you have a well-structured kite, and it's built to withstand and work within that environment, you can actually have a pretty good return with it. But you just got to make sure that it's structured in that way. And I think is probably the real key from here. It's about investment again.
Investment again. Patience, the word I've heard from several people lately, it seems to be the key.
Yes. Yeah, well, and well, patience is and having.
I'm terrible with patience myself, but that's why I'm trying to find some ground.
Yeah, well, that's right. I think the key is one of the things I think for the last 10 years, making money was easy. The next 10 years, it's going to be about making money, but it's making money with investment acumen once again.
Always a pleasure, Brad. Always great to have you. Look forward to the next time.
Thank you.
Brad Simpson is Chief Wealth Strategist at TD Wealth. Up next, our conversation with Bill Priest of Epic Investment Partners about the state of globalization.